Welcome everyone, and a very special welcome to our two guests today. So today I'm thrilled to have Nelson Dueza, who is the Director of Residential at Colliers International, and Andrea Svenson, a Business Development Manager at Deposit Power. Welcome, guys.
Hi, Craig. Hey, mate.
Good.
Thanks for having us on board.
Absolute pleasure. Thrilled that you're with us. As a start, Nelson, I'm going to ask you the current state of the market. It's obviously the question everyone's asking. Where do you see the current market? And let's talk Sydney specific at the moment.
Yeah, well, I basically do Sydney specific. So, look, we're seeing it as a very strong market for first home buyers. It is, people are saying that it's a buyer's market, but it definitely is very geographical. It depends on the areas that you're in. We're seeing some really strong prices in the eastern suburbs and in the lower North Shore for higher level properties. And then for first home buyers in the catchments sort of out west, where property prices for a 2-bedroom apartment are, for instance, under the 800 mark, that's really strong as well. So there's two strong markets, and that is the owner occupiers in really great areas, and then also the price point markets where properties are valued at a lower level. They're going really strong as well.
Right, and in terms of COVID or actual traditional spring activity, has there been any changes during COVID or with COVID?
I found now that we're coming into spring, sorry, there is a bit more property coming on the market. And again, it just depends on your price points. The way COVID has probably affected the market more so has been to do with investors in the market. And I'm not sure if you've had people like on the Mareka or anyone in property management come and speak on our webinars, on your webinar series, but they would have mentioned that we've found that rental yields over the past 3 to 4 months have really dropped. And so therefore, with rental yields dropping, a number of investors haven't been getting into the market. So a lot of our strategies in selling properties at the moment are really directed at some form of owner-occupier.
Right. Andrea, you were saying to me the other day that before you, I guess, explain what a deposit bond is, you were saying it's one of your busiest months ever, or a couple of weeks ever. So yeah. What are you seeing out there, in the market?
Yeah, certainly. So through COVID, we've been getting busier and busier. Obviously, we're a bit quiet the first couple of months, that March, April, just the same as everybody else. There wasn't much purchases happening out there. However, since then, and particularly so in the last couple of months, we've been busier than what we have been in the last 2 years. So that just goes to prove that the market is definitely picking up. Our product only works with purchases. So yeah, it just goes to show it's improving day by day, especially coming into the end of the year as we see more properties come to market through spring.
Great.
Andrea, can I ask you a question? Sorry, I just thought of something then, and that was with you getting busier with your deposit, with the bonds, are you seeing that you're giving them, out to more owner occupiers or investors at the moment?
Oh, look, we have a bit of both. We're probably not seeing as much of the investment activity as we were before. Definitely also your owner occupiers and first home buyers specifically, obviously coming off the back of the first home buyer scheme that the government's brought out in the last couple of months. Yeah, we're seeing a lot of owner occupier activity out there. So less of the investor stuff as we thought we would have seen a lot of at the beginning of COVID. But yeah, definitely more of the owner occupiers for sure.
Look, I think that's a great time to actually explain a bit more about the product. So obviously a lot of people online today are first home buyers and essentially tenants that we are suggesting to start looking at buying their own property. Why rent and pay? Rent money is dead money, as they say. Let's get you into your first property. So Andrea, if you don't mind just explaining what a deposit bond is and how it works for our audience.
Of course. So for those of you that aren't aware, a deposit bond basically assists you with issuing that initial 5 or 10% deposit before you're exchanging on your property purchase. So say for instance, you didn't have that liquid cash available, we can assist with issuing a guarantee or a bond, deposit bond, in order for you to exchange. And the way our product assists first home buyers, say for instance, you already had your 5% ready to go, but the vendor requires 10% and they're not willing to budge on that 10%. that's when you can reach out to your mortgage broker and we'll come through to Deposit Power and we can assist you with issuing a bond. We basically, if you've got parents that are willing to go guarantor for that initial deposit, they're not having to put down any funds whatsoever. We're just leveraging off their property in order to assist you initially so you can exchange. And then your funds will come over from your loan proceeds at settlement. So you're not having to pay us back. It's not a loan. We're not lending money. It's purely a guarantee to say we viewed your asset position or your parents' asset position, and we're hopeful that you will complete a settlement. In a nutshell.
Right. Great. So, you know, often with high loan to value loans, as you said, the vendor is requesting at 10%, but your mortgage is for 95%. Well, you don't have that 10%. So it's a perfect scenario. On the upgrade, so explain how that upgrade will work. You're selling and buying, and obviously there's that timing difference. How would that work?
Yep, definitely. So seeing a lot of the upgraders at the moment, people even wanting to relocate, you know, coming out of the busier suburbs and looking at, you know, going more regional, a little bit outside the cities. So with that in mind, say for instance, you've sold your property and, you know, you don't want to wait until settlement occurs before you're then purchasing another property. You don't want to be left homeless. So that's where you can use a deposit bond. So we leverage off the equity in your existing property that you either have on the market or you're getting ready to sell. And we can issue a deposit bond in that instance. That way you're settling on both your existing property plus your new property at the same time. And the funds will just come across at settlement from your existing property to essentially pay back the deposit bond at settlement.
Right.
Sorry, Andrea, what's the cost of a deposit bond? Is it a percentage of the sale? Or is it like, how do you?
Yeah. So with our bonds, you're looking at for a short-term bond. So we've basically got one product, but there's two ways you can use it.
Yeah.
One of them is our short-term, which is probably our more common use of the bond, which is with any settlement periods of less than 6 months. So it should hopefully cover the majority of your purchases. Your short-term bond fee is 1.3% of the deposit amount. So say you've got a $100,000 deposit bond that's required, the fee would be $1,300. And that's one upfront fee. There's no ongoing interest. With the longer settlements, so anything over your 6 months, and we go all the way up to 5 years.
I was going to ask that about properties, because we sell properties off the plan as well. Yeah. And so some people need to borrow, you know, for 3 years, and it's good to have that option. You know, can they extend on the bond if the you know, the building takes longer to build, you know?
Yeah, definitely. So like I said, Nelson, you know, there's a lot of off the plan stuff still happening. We go all the way up to 5 year mark. So say for instance, we do have to base it off the sunset clause in the contract. So if there is a sunset clause, just be mindful of that. So that may increase your fee that's payable. However, that means it will cover you for that entire period. So say if you weren't, you know, in a contract for those first home buyers that haven't looked at off the plan contracts before, you have a completion date, and then you generally have a sunset date as well included in that contract. If you're not settling on that completion date, sometimes builders, they take a while to settle after the fact. So that bond will actually secure you for that whole period up to that sunset date. And like I said, we go all the way up to 5 years. If you were to settle prior to the sunset date, we can also issue a rebate. So you're not actually having to pay, you know, this huge fee and be completely lost out as well. So we can have a look at issuing a rebate there as well if you do settle prior to. So like I said, Nelson, works fantastic with the off-plan stuff. Yeah,
but they would be a little bit more expensive because of the time, you know?
Yeah, they are. It's a bigger risk to us involved because we're issuing the bond for a longer period. However, it's still a great way. So instead of having to part with, you know, say you purchase a property for $800,000, and instead of, you know, having to walk away and say, look, I'm happy to put down $80,000 and then, you know, lose that for the next couple of years. Well, not lose it essentially, but instead of having to part with that cash for that amount of time, a deposit bond's a great idea in lieu of putting that cash down, because that way it just makes you hold on to your cash until it's absolutely necessary, which would be at settlement.
Oh, totally, Andrea. I think it's a real win-win for both, because most developers now, you know, they get a sale, they can move on to their construction, and plus, you know, the buyer has the the security of securing the property and then yet not using their funds so much, you know, if it costs them a few $1,000s just to have that security, and then they could, you know, I mean, they could invest that 80,000 in something else and probably gain further interest as opposed, or use it for whatever else.
That's right, exactly. They can have it sitting in, you know, if they're already an existing homeowner, they can have it sitting in an offset account, or they can have it sitting in an interest-bearing account and earning interest during that whole duration. So yeah, it's definitely a great product, and it does help secure them as well. So builders or developers aren't able to access the bond. Sometimes, you know, how they ask to release the funds to be able to complete the rest of the apartments.
Yeah.
They can't physically access it. So it also secures the customer. You know, they don't have to risk putting that cash down and the developer using it for further sales.
Yeah, no, for sure. I think it's a great idea.
Yeah, yeah. And you mentioned you've got a lot of off-the-plan stuff. Where are you seeing majority of your off-the-plan purchases?
Well, I mean, we're lucky here at Colliers that we've got actually stock all over. But the first home, it depends. First home buyer stock is, again, price related. But then we've got off-plan properties in Randwick. We've got properties off the plan coming up in Bondi. We've got other great developments in St. Leonard's. We've got some properties coming up to completion in Milson's Point. So we're kind of, we're all over Sydney at the moment. We're even as far as Penrith, you know, and again, Penrith and Parramatta, really well-priced stock. So the well-priced stock is selling quite well.
Yeah, that's great, guys. I mean, we were talking about the fact that the government incentives, especially over COVID, have increased. So you can now buy up to $1 million and get some government exemptions on stamp duty. So I have no doubt some of those properties fall in that range, Nelson, that you guys are selling at the moment. So great option for someone. Look, I think it's a great time for first-home buyers. We've never seen interest rates so low. You know, you're getting rates in the low 2% at the moment. We've spoken about these government incentives. You know, we've spoken about the fact that rent money is dead money. Anything else, Nelson, that you can think why first-home buyers should seriously consider getting in now?
Yeah, well, like you had mentioned, we were speaking about it before as well, as, you know, just the fact that the investors aren't there. So first-home buyers, on top of having all these great incentives to buy and the market not being, you know, super inflated. So there's that security for a first-home buyer to go, well, I'm not buying in this, you know, real upscale property market where I'm competing with investors. The fact that the investors aren't really in there at the moment means that they're not competing with investors. They're probably just competing with other first-home buyers, which is more of an even playing field. You remember that probably, I mean, just going back 12 months or is it 12, or when we had our last election, we had this big argument that, oh, you know, our first-home buyers can't get into the property market because they're competing with these investors who use negative gearing and they're driving the property prices up, you know. Well, that isn't happening right now. You know, our investors are. I think, personally, I think in off-the-plan stock, I think at the moment, even as an investor, I think now is a great time to get into the market. I think what we're seeing is the pipeline, the funnel of new property coming to market is really dwindling over the next few years. And so you could imagine a perfect scenario of someone buying today an off-the-plan property that isn't going to be complete for maybe 2 to 3 to 4 years. So we're talking, you know, 2023, 24. From what we've seen, and this is through our New South Wales councils, is that the DAs around 2023, 22, 23, 24 are at an all-time low. So we're going to see a real low supply coming to market and completing it around that time. So if you're, you know, it's all, the property market always, one of the biggest things is in the property market that determines pricing is interest rates and supply and demand. So, Craig, can you see interest rates going anywhere? You know, are they going to skyrocket in the next, you know, 3 to 4 years? No. So we're saying there's nothing going to happen there. But on top, we are going to see a real low supply of property come to market, and so therefore we're going to have low supply, coupled with the fact that I think that the way once the borders do open after COVID, I think that the way Australia still offers great security, both financially and now as a health-wise. I think the way that Australia's handled COVID, I think we're going to become, as a country, and specifically Sydney, is going to become even more attractive to people, more attractive for students to come over, more attractive for any form of migration. If you couple all this with low interest rates and a low supply of property, if you were to buy today and settle in 3 years' time, I think you might be in a really good position.
Wow. No, that's great insights, and that was terrific. I'm going to actually open up the floor because I can see we've got a couple of questions coming in. Carl, can you maybe fire some of these questions at our panel?
Yeah, sure thing. We're getting a lot of questions coming in. If anyone has any final questions, feel free just to type them in the Q&A box. The first question we got is for Nelson. What is his thoughts on rent vesting? You might want to explain that term to the audience and what that means for first-time buyers.
Well, I think it's a great idea. To be clear, I'm a rent vestor myself. You know, Craig's done my finance on a couple of properties that I own. A few properties. One, you know, I think I've got a property in Adelaide, a couple in Sydney, but I live in a home in Randwick because my kids go to school in that area. So what it means is that you live where you want to live, but you're buying property and investing in property where you can afford, so to speak. So you might buy a property in Castle Hill, but you want to live in the eastern suburbs or in the lower North Shore, but you can't. But you're still getting into the property market. Now, one of Craig's famous sayings is, it's time in the market, not timing the market. So if you're investing today, and you know, most of your investments should look at a long-term plan. You don't invest today to sell tomorrow. You invest today to hold and maybe sell it in 10 years' time. And I mean, that's my plan. Or use the equity in that to then buy another property. Yeah. If that's the case, history has shown us that the Sydney property market has only gone up over if you hold for a 5 or 10 year plan. And that's what rent vesting means, that you're living where you want to live, but you're investing in properties that maybe show a better return, a better yield. So you're buying something for $600,000 that, you know, gets a return of $500 a week or somewhere close, so that it's actually, so your out of pocket isn't as much. I hope, does that answer the question?
I think so, yeah. And it's a very popular way for first-home buyers to get into the market, and it also helps them, you know, live where they want to live and buy where they can afford to buy. Nelson, what are some of the essentials first homeowners need to do before purchasing?
Well, I think a first-home buyer really needs to do their due diligence, and that is, I think, speak to some of the people on this panel. If I was a first-home buyer, I would ideally have my mortgage sorted out, have my deposit sorted out, then speak to your solicitor or your conveyancer. You know, especially you want to have the security that you know that, okay, when I buy a property, I'm ready to go. You know, you probably want to speak to an accountant as well. You know, just get some advice from your accountant. So bang, you spoke to your accountant, you've got your deposit sorted out, you've gone to your mortgage broker, you know exactly how much you can afford to purchase comfortably, and you've got a solicitor ready to go to maybe organise, if it's an apartment you're buying, they'd want to get a strata search to make sure that everything's fine. If it's a house they're buying, they'd want to get a building and pest inspection. You know, those little things, that's the due diligence. It's that's the purchasing 101, you know what I mean?
Exactly. Craig, we're getting some questions on government grants. I guess in addition to government grants, what are some ways first-home buyers can get into the market in an easier strategy? Obviously, there's some low rates specifically for first-home buyers, family pledges. Is there anything with the 20% deposit that can help them?
Is that for Craig?
Yeah.
I didn't actually hear the question. Sorry, it went off. Can you just say that again, Carl? Sorry.
Sorry, I'll say we got a couple questions on the government grants. In addition to the government grants, what other strategies can help first home buyers? Obviously, there's lower rates, family pledges. Is there anything with the 20% deposit at the moment that can help them?
Correct. So look, I'll jump in there. So first of all, there's also the first homeowners grant. Of course, if a property is bought, a brand new property is bought under a certain threshold, the government are giving it the 10 grand first homeowners grant. The other one is it's actually an interesting one. We're seeing some lenders at the moment coming out with some special deals, whether that be cash rebates for purchases, but also up to $4,000 for giving your loan to that bank. Also some 85% no mortgage insurance incentives or options, and one or two of the lenders are going as high as $1.5 million. So they will allow you to purchase up to $1.5 million with an 85% loan with no mortgage insurance currently. And these are promotions that are coming out each day. So hopefully gone are the days where you still need a full 20% deposit.
Nelson, are we getting much inquiries from overseas?
No, at the moment, the overseas market has really slowed down. So that's another great reason why first home buyers should be looking today, because you're not competing against an overseas market. And that's like what I said before, was that I think that by the time we're turning 2023, 2024, or you're going to look towards the future, you will be competing with overseas again. So I think that, I think now's a great time.
Andrea, can you explain your fee structure for our guests?
Yeah, sure. So like I mentioned before, with our short-term bonds, you're looking at 1.3% with anything less than a 6-month settlement period. It's one flat fee, so it doesn't matter what it's for. If you're a first-home buyer, even purchasing a commercial property, or you're purchasing an investment property or owner-occupied, it's the same fee. So 1.3% with a less than a 6-month settlement period. Like I mentioned as well with the offer plan one, it is a higher fee, and it is dependent on the deposit amount and as well as the term. So it's a manual calculation that can be done either by your broker, or you can even jump online and do a quick quote. We ask about 5 questions, so it takes you all 2 minutes to grab the quote. And that's for all residential quotes there. So if it is a commercial purchase, you will need to come through to either your broker or through to our head office for that quote. But yeah, it can be, it works out roughly with the long-term to be about 3% of the deposit amount. It is a sliding scale, so it's not exact. But yeah, roughly about 3% of the deposit amount. So as you can see, it is quite of an increase compared to the 1.3. But that's because it's long term. We're issuing the bond for a long period of time.
Awesome. Well, thanks so much. Unfortunately, we're running out of time. There's a few questions we couldn't get to, but we'll email you after this webinar, along with a link to the webinar in case you came late. Thanks everyone for coming. Craig, I'll leave it to you.
Thanks, Carl, and thanks for being the MC today. Look, a massive thank you, obviously, to all our attendees for joining us today, and of course, to Nelson Dueza and Andrea Svenson, both very experienced players in the industry. You have loved sort of having you here today. What a great topic, opportunities for first-home buyers and what tenants should really consider buying. We've covered it all: incentives, cheap interest rates, the ability to get a deposit bond without having to put in any of your hard-earned money in up front. It's just such a good time to buy. There are no investors or less investors in the market. So yeah, just keep on reiterating why a good time for people to consider entering our property market. So thanks again to the two of you. Any parting words, last parting words from either of you?
No, just get in touch. Get in touch. We've got some good properties. We've got great product. And that's for Andrea as well. She's got a great product. Craig, you've got a great product. And yeah, I mean, if people were to get in touch, I'm sure we could, if they're ready to buy, I'm sure we could all help them find and buy and secure something. And like I said, I think now's a great time.
Great.
Definitely. And guys, just for my sake, if there's I guess, easiest way to think with a deposit bond, if you don't have that liquid cash available, just feel free to give your broker a call or give us a call straight away, and we'll be happy to help.
Thank you again, everyone. Thanks to our attendees, and look forward to seeing you at our next webinar, which is, I think, the 14th or 15th of October, but we will send you out some details. Thank you, everyone, and good morning.
Bye.
Bye, guys.
Thanks, mate.